Welcome back, everyone. Another edition of Tech Tune-Up. I'm your host, Paul Meeks, as always, brought to you by our friends at Benzinga. Today's September 2025. Lots of very interesting things to talk about. I will tell you this. I am going to be lighter today in the first segment, which is the news. Heavier today in the second segment, which is really delving into my buy list, because here's what I see. September is typically a nasty month for stocks, the nastiest among the 12. And we've already started a little bit of a correction with the tech sector stocks that started last week, continues today, if you've seen the price action. So I think we should be crystal clear as to when the smoke clears, what we're buying to. This could be a really good opportunity. Sometimes I tell you that tech stocks aren't even buyable, even though it's my sector. That happens from time to time. But anyway, not now, maybe not tomorrow, maybe not next week, but I think as we get through the month, some of my tech favorites, and let's focus on those today, will be probably for the first time in a long time, pretty good buying opportunities. So that's where we're going to get a little bit deeper in that section of the program. Then, as always, I'll finish up with some broader trends and get to a couple questions. So anyway, let's do our at least brief synopsis of the news. I was asked on Yahoo Finance just about an hour ago when I was on air about Broadcom's quarter. Broadcom will release its results after the close this Thursday. And I must tell you that even though Broadcom delivers the mail, typically, I'm incrementally worried about this quarter. Why? Because one of its competitors in the design for the hyperscalers of their own in-house AI-oriented GPUs, Marvell Technology, ticker symbol MRVL, had pretty poor quarter last week and gave kind of shady guidance. So hopefully that's a one-off and that's a very company-specific Marvell problem. But Broadcom is a different company. But when I see some warning signs, it just gets me a little bit more concerned. Here's how Broadcom is a bit different. First of all, Broadcom is an interesting hybrid in technology. It is a combo of a software and a semiconductor company. Broadcom also is a very acquisitive company. It does a lot of deals. The next thing is, even though Broadcom, like Marvell, which reported some troubles, does help the hyperscalers design their in-house AI GPUs, so they're not going to be beholden long-term to either Nvidia or AMD, Broadcom is more than that. They also sell a lot of chips and other components that go into data networking gear for the very same AI data centers. And so we'll see what happens, but there are some differentiating factors. But let's see if when we get to Thursday afternoon, does Broadcom confirm my thesis of continued AI infrastructure building, or does it refute the thesis? We'll see. I feel that the company will beat the numbers. I think as typically they're going to have a good forecast, but we'll see. What that tells me is if things are even the least bit squishy as they are here, you do not buy the stock ahead of the quarterly earnings report. You wait for the report, you absorb the data that is given, and then you make a decision. I very rarely, particularly when quarterly earnings reports are only a couple of days away, I very rarely buy ahead of a quarter because I'd rather have the info. And the SEC makes sure that these guys give you info every 90 days. You might as well listen to it, absorb it, and act on it. Next, MongoDB, which is a stock that on this program was on my list a year or so ago. It hasn't been on for a while. They announced a quarter last week that I thought was super impressive. So their EPS that they reported was double the consensus. And so they're on a nice streak of beating the numbers. You remember my cockroach theory? Whenever you see one roach on your kitchen floor, you know there's more than one. The same thing goes for Wall Street. If a company beats Wall Street, it typically has a nice couple of quarter streak in which they continue to upside numbers. And if they miss Wall Street's consensus forecast, they might have a unfortunate lengthy streak where they miss numbers. But MongoDB looks pretty good. Right now, it's on my watch list. I'm going to do some more study, but it may come back to the Meeks buy list. I think the deal that AT&T did, they bought $23 billion of wireless spectrum from EchoStar, is a tell what is happening in telecom, particularly with the major players in wireless, AT&T, Verizon, T-Mobile, is they have an opportunity that they're trying to seize upon to bring you not only 5G wireless, but also your broadband connection in home. So say goodbye. Even further pressure will be on the likes of Comcast and Chartered and other of these old dinosaur cable companies, because the wireless companies are now coming for even more of your business with your residential customers. So we'll see what happens. You know, in my space, typically the only one of the big three wireless companies that stays on my list is T-Mobile. I just think T-Mobile is a much faster grower and more tightly managed company than the others. A couple of more good quarters reported last week on companies that I don't follow maybe as closely as I should, but I will follow them now. Box and Okta both had reports that were nicely ahead of expectations. Some of these companies that some folks have been giving up for ghost are now starting to really see and, more importantly, monetize some of these AI drivers. You know, we're always looking for case studies. And AI, everybody knows about the hundreds of billions of dollars that have been spent building the data centers to support AI programs. Now we're starting to see some interesting stuff in that pipeline, some interesting case studies. Snowflake. I had a hold on Snowflake going into their print last week, and they had another nice quarter, a couple in a row. The cockroach theory is alive here, and it's the good side of the equation. And so Snowflake is very interesting to me. I always want to buy it a little bit lower, and maybe this month it'll give us an opportunity. But if it does dip, do not let the month of September escape without maybe starting at least a small nibble position on Snowflake. The very private, but I imagine will go public now with its success and Snowflake's success company is Databricks. Remember, I got you into, or at least started talking about CoreWeave, 6-9 months before its IPO. That was at least so far this year, the big tech IPO, or at least one of the big ones. But Databricks is a privately held company. It competes with Snowflake, so we know the group is red hot. And I hear very good things about the technologies of both companies, one public, one private. And I imagine that particularly since the latest private round of funding for Databricks put the valuation of the company at a very large $100 billion, the next step will be no more private rounds of funding. They will go public. And I expect that to be the next big one, or potentially the next big tech IPO, probably later this year, if not definitely in 2026. Dell had a nice quarter, I thought. And among the AI server companies, you have Dell, you have Hewlett Packard Enterprises, and you have Supermicro, SMCI. I will tell you, just like Snowflake, I see a nice buying opportunity in here with Dell because they had a pretty good quarter. The last time that they reported to us 90 days ago, they said they're going to do next fiscal year $15 billion in AI server shipments. 90 days later, they've upped their guidance to 20 billion. And it looks like the performance that they just reported the other day is showing me an annualized run rate of AI server revenues of about 23 billion. So it looks to me like even their latest upgraded guidance is going to be too low. However, the story wasn't perfectly clean. They never are. And Dell got hammered after its report. So this is a good opportunity to be a contrarian. And this month, when that stock finally finds a trough, take a look at the price chart. And when the trading volume dries up, so it tells you that the selling is exhausted, I think you go into Snowflake and Dell. Tonight, I'll be intrigued with the report from Zscaler, ZS. Now, Zscaler is a cloud security company. We'll see what they have to say, because I'm always looking for companies, even if I don't cover them carefully, that are going to confirm or refute one of my bigger investment theses. And then lastly, I think it's interesting that the nuclear arms race of AI data centers being built by Amazon, not just in the US, but all around the world, continues, because they announced that they're going to spend $4 billion on such in New Zealand. And in all places, New Zealand, and not only is it $4 billion for data center infrastructure building, but also probably going to hire about 1,000 Kiwis. Isn't Kiwis New Zealand? So I hope so. But anyway, it goes to show you that Amazon, with its deepest pockets, and Amazon, probably the most aggressive company on the planet Earth, is a full-fledged global assault on AI data center infrastructure building all around the world. We'll see. So now I want to spend a little bit more time talking about our buy list. Let's get into that. This, I think, is very interesting because, as I told you before, I see an opportunity sometime in the month of September. Today is September 2, to pick up some tech darlings that, at least in the near term, for probably no fault of their own, really based on macroeconomic and geopolitical factors, have come under some pressure. So you guys know, even though it has started to run, I still see among all my tech stocks on a percentage return basis, the greatest upside in AppLovin. Now, what I'd like to do is buy it at its 200-day moving average support, which is $437 a share. Taiwan Semi got a little bit of a hit today, but I think it's going to bring a buying opportunity. You know, of course, Taiwan Semiconductor is embroiled in this continued negotiation between the U.S. and Chinese over not only tariffs, but export controls, particularly on our semiconductor chips sent to the folks abroad from the likes of AMD and Nvidia. So the latest, and unfortunately not greatest, for Taiwan Semi is they're now facing stiff U.S. restrictions on the equipment to build semiconductors that they can ship into mainland China. Remember, this is a company that's on the island of Taiwan. And it doesn't really matter, I think, because their latest technology is something called 2 nanometer. And they have been qualifying equipment to start rolling with this new processing technology. And so far, they haven't been qualifying Chinese machines. And so maybe at the end of the day, this does not have that big of an impact on the P&L of Taiwan Semiconductor. But still, it's an obstacle. Still, it's an annoyance. But if this continues to whack the stock, you know, I love Taiwan Semiconductor. I am a better buyer. Meta, continue to like. Actually, it's come in a little bit. I would buy some more at 725, which is its 50-day moving average. Nvidia, I reported on that last week. They had a good quarter. You know, they're going to be under some pressure until we have that Trump's big, beautiful trade agreement with the Chinese, or not. But I think the stock is clearly worth more than $200 a share long term. And so, you know, pick your poison. I think Nvidia is a better buy, continues to dip here. Snowflake, I just mentioned, I love it. I absolutely love it. But the stock is showing some pressure, like everybody else these days. I would wait to buy it on a pullback to $230 a share. I haven't looked at the price in a couple of minutes or hours. Might even be there right now. I continue, like some of my portfolio, to be non-US, and I've recommended some time ago ACWX, which is the International ex-US ETF. It's done very well this year. Finally, some of these other regions are getting some comeuppance because they've had their ass kicked by US allocations for a long time. Quickly on these, because nothing has really changed, I'm still a fan of Uber, Cadence Design Systems, Robinhood, two of the GE spinoffs, GEV, GE Verona, and GE Aerospace. I like very much Microsoft and Netflix, but I have them in the holding pattern because, frankly, their charts kind of suck. So I'm waiting for them to find a base and then find a base on dried up volume, which again tells me selling has been exhausted. Good time for a contrarian buyer. Done well. You've done well. You've listened with Boeing and TE Connectivity, TEL. I very much like one and only one tech stock in China, and that is Alibaba. It started to have a nice run. I gave you my thesis on Dell. Do not let September escape, particularly if the stocks continue to drop, without picking up some Dell and without picking up some Snowflake. I always get asked, because I've been talking about this company for a year or more since it was private, what to do with CoreWeave. Now, remember, my cost basis is much, much lower because I was in it at a private investor. But I will tell you, even for public investors, with the collapse that it has seen, particularly if it hits my $90 buy limit, I might even buy some more, even though I'd be increasing my cost basis, and I would ask you to consider it. CoreWeave under $90. Despite all the controversy, and I think I'm right on this one long term, you'll be fine. I wouldn't put a lot of money in it because the trend is definitely not our friend, but I'm okay with a small starter position in CoreWeave under 90. So I wanted to give you a little bit more color today on that because, this is really important stuff and we're trying to make money here. So let's finish up with some tech trends. Hello. Well, I'll give you the tech trends, even if we don't pull through. I lost my producer here. I love to talk about, here we go. I love to talk about the Fed because it's so important, the valuation of the stocks in my sector. So it's now an even higher probability, 90%, if you take a look at Fed funds futures contracts, that the Fed will lower rates by 0.25% on September 17th. What is more controversial is the next meeting, which I believe will be October 29th. What do they do? It looks like a toss-up, according to street pundits, because it's about a 50-50. Are they going to lower at that meeting another 25 basis points, or are they going to stand pat? We'll see. Of course, another day, another Trump comment, or one or two or three or five or seven. But the latest is, not only do we have what I described, this new obstacle put up for Taiwan Semiconductor, but Trump is going to be very aggressive, at least from his comments, on all the countries, which are mostly European countries, that are imposing digital taxes, mostly on our social media companies like Meta and Alphabet. So we'll see how that goes, because that is something that may be intractable for the regulators in Europe when they deal with U.S. companies doing business in their region. So we'll see what happens. But it could be a nasty, yet another brouhaha between the U.S. and some of our partners or allies. The other thing I think is very interesting is Trump Media, which was created, as you may recall, to be essentially his go-to social media platform, even though he also tweets a lot. They've transformed themselves from a media company, because that never really caught on. They've been public for a year or so through a SPAC, and I don't think they've even ever had a quarter since then in which they even had $1 million of revenue, which is tiny, tiny, tiny. But they've gone out and they bought a bunch of crypto. And of course, the Trump administration is very friendly regulatory wise to the crypto industry. So now we have several $billion in value for that company from the coins. Depending on how you feel about the president, did he game the system or not? But anyway, now Trump media has some value, but it has nothing to do with media trading Bitcoin, not Bitcoin, but other coins. The last thing I just wanted to touch on, because I do think it's important, is there has just been a meeting right over the weekend between the leaders of China, India, and Russia. Now, Russia, I don't care much about economically. It's not even a top 10. However, China has 1.4 billion people. India has even more, 1.5 billion people. And together they comprise about 50% of the entire world's population. And the US only has 340 million people. So if we continue to have this back and forth, particularly nasty relations between the Chinese and the US, you see another potential competing power block forming. And that could be really worrisome. And of course, Russia is trying to ride on the coattails. But India, China, US are going to be tightly intertwined, if they like it or not, for the future of technology. We need those big markets for our tech companies to continue to grow. If they form some sort of competing block and they shut us out, we could be in some trouble. So I just wanted to point that out. So here we are at the end of the program. Spent a lot of time today on what I think you can buy, particularly as we roll through the month of September. But let's get into, in the final minutes, some questions. Paul, your thoughts on CRM, which is Salesforce.com, into earnings? I think that their report should be okay because, Wall Street has been poo-pooing Salesforce.com for some time. Nobody has very aggressive estimates on the street. The stock is kind of, and the company has been considered a drag from AI, not a beneficiary. Of course, Mark Benioff would tell you something else. So what I would do is, if the bar has been set low, which I think is low enough, so Salesforce won't miss, a little bit more squishy with their guidance, but I think it's probably okay to hold into the quarter. But I tell you, I am not convinced, even though this company deserves a lot of credit for essentially inventing the enterprise resource planning software space, and particularly selling software as a service. They deserve a ton of credit. But even though they crow about how they're reorganizing their firm to embrace AI, I still think this company, at the end of the day, net, could be disintermediated by AI. And that's why the stock hasn't been participating. I think other people have the same view. I would not have this stock long-term until they show me that they can get back some of their 1990s greatness by being an AI player. I haven't seen it yet, and I have so many bigger fish to fry in AI, even AI software, than Salesforce.com. TSMC, Taiwan Semi, makes the M chip for Apple at the moment, and perhaps Intel could in the future. I think that is true. We know that the federal government aggressively took a 10% stake in Intel because it is not satisfied with Intel just getting its mojo back to ship CPUs that go into laptops and desktops. They want them to have a vibrant outsourcing business, a la Taiwan Semi, a la Samsung in South Korea. But I will tell you, despite that $9 billion investment, I don't know if Intel being in the outsourcing business is really a good thing for Intel shareholders, because it's a real money drain and it's been a big loser thus far. They can't seem to even sign one marquee customer for those fabs. I'm not a fan of Intel. I don't think that we should have spent $9 billion of taxpayers' money to support Intel. I'm not confident that they will come back even with this support. I think they're too far behind manufacturing-wise. And yes, we are going to try to support our national best companies like a Qualcomm and an Intel with manufacturing here in the States. But these guys know that if you want the best manufacturing, the most efficient, you're going to have to go with fabs in the States, most of them around Phoenix, Arizona, with either Taiwan Semi or in Texas with a Samsung fab. So my belief is, yes, we will be manufacturing here in the States, but the best and brightest will be one Taiwanese company, one South Korean company, and not U.S. companies at all. I guess at least they'll hire some U.S. employees while they're here. But I think Intel has had too much of a run-up on this rescue plan. I don't want to say it's a short seller, but I don't like Intel at all. Do you think software stocks like Now, which is ServiceNow, will continue to go down because of the AI scare, or is it already built into some of the software stocks? I think that ServiceNow does seem to embrace aggressively AI. I always felt that they were the best one in that space, best managed. I also think SAP out of Europe has some game, but I do not like Workday or Salesforce.com. I like Oracle, not because of its software biz, but because it has Oracle Cloud Infrastructure. And so it is going to participate in the AI boom by helping others build AI infrastructure, not by selling software. So ServiceNow and SAP are my choices there. I pan Workday and Salesforce.com, and I like Oracle in the space, but for a different reason, Oracle Cloud Infrastructure. All right, guys, that is it for today. I'm very easily found through Benzinga, LinkedIn, everywhere else on the planet. Keep watching me, subscribe, like, give us some love. The same thing to my buddies at Benzinga. And we have some interesting stuff to talk about next week. Particularly, I'll be reporting back to you on what happens Thursday night with Broadcom. Till then, see you later.